Today, I want to speak around a powerful trading strategy I've been using where I can trade up to $40,000 in position size with only using $100. Now, there are certain times where the market conditions can be very tough. And the important thing when it comes to succeeding in trading, it comes down to risk management. It comes down to how much money can you risk and can you still get size into the market. And that's why today is very important, because not only can you put a little bit of your capital in, you actually get to trade with massive size. And the reason why you do is because there's no fees on the system that I'm about to teach you guys. I'm Sheldon, welcome to the channel. So the first thing I want to speak around is there are different markets when you're trading, right? There's crypto, there's the stocks, there's gold, there's commodities, there's a whole bunch of different sections, right? And there's times where crypto's down. So as I'm shooting this right now, crypto is quite choppy right now. High time frame, it's kind of doing nothing, and it's very difficult to make daily cash over there. Where you truly make money with crypto trading is when you catch the bigger swings, when you can catch something where we actually see a couple of weeks of growth to the upside. Because when it comes to trading leverage, as an example, you are paying fees, right, when it comes to leverage positions. So yes, you can trade your money size up, but you're getting charged fees on that oversized amount that you are trading with. So when it comes to chopping around and getting stopped out multiple times, you can end up losing a lot faster, right? Lose capital a lot quicker by having multiple losses. So the key is to catch a trending market, either a down or a uprising market where you can get one or two entries, take one or two stops, but ultimately trade with the momentum. When it's doing this, it gets really tough, which means you then want to shift to another market. So again, when you're looking for a platform, you're looking for somewhere that you can trade multiple different markets. Now, the one I'm speaking specifically today is trading around gold. Right now, gold was something that I was very far from doing. Right? I was never really interested in it until I realized the size that you can trade with. Right? Until I realized that the wicks are a lot less. Right? It's not as choppy as crypto. So when crypto is in this chop, it's really difficult to trade. Right? But if gold's in a chop, it's a little bit different. It's not as wicky, not as volatile. It's a lot slower. However, you can trade with so much more size. Now, the problem with size when it comes to trading is the fees. If I have $1,000 and I trade on 100x as an example, I'm trading $100,000. But because of the fee structures of that, right, I could be losing $50 just by opening a single trade. And then closing a trade, I'll lose another $50, right? And that's the problem when it comes to trading with size. Now, if you look at the traditional way of trading the markets, if you're trading on MT5 or a different way, there's actually no fee structures. Okay, but the problem with that for me was everything was all over the place. If I traded crypto, it was here. If I traded stocks, it was over there. Now we're having, right, stocks coming to crypto where we can trade on one platform and trade all of them. Now you got a difference here. You got something called CFDs, right? And then you got something called tokenized stocks. Now when you trade tokenized stocks, you're still using the exchange's liquidity. Therefore, when you're trading, you're still getting fee structures, right? You're still using their liquidity, therefore fees are still coming into play. When you trade CFDs, they basically take an MT5 and allowing you to trade on the platform. So it takes away the fee structure. So the first thing I want to show you guys is the platform I'm using is Bitget. Right? Bitget are one of the only ones that really have CFDs, right? Where it's not just tokenized stocks. You can actually trade off MT5, right? Just off of the platform. And if you click on this over here, here's a simple way of opening up your Bitget platform. Clicking on this over here, you do have to hand in some details to open up your account. But once it's opened up, it comes to this section over here where it has this full tutorial section here. Okay, and then we jump into the trade section. Then you basically come through over here to this section over here, right? Now, this is slightly different when it comes to leverage trading, right? Leverage, you can usually choose your leverage up over here and change your leverage amounts. Here, it's kind of all calculated in this, right? And all you have to do is just focus on your risk and your reward, okay? So when it looks like this, you can trade up to a 500x position on gold, which sounds absolutely crazy. Guys, if I trade that type of leverage on crypto, it's basically impossible, right? Unless I catch a very big swing move. But the amount of fees that I will lose, right, by opening a 500x position, it's just crazy. If I have $100 and I open a 500x, I'm probably spending $200 on fees, right? So it's crazy. It's just not possible. And the second thing is crypto is a little bit too volatile as well, right? You can just get it wrong way too many times. So gold for me is something that's a lot more stable. But what really makes it interesting for me is I can obviously trade the size, right? So a very simple thing here, just to go through the platform here, is under the TradFi section, you have the CFD section. Right, and this is where you can trade the metals, the index, the Forex, right, commodities. Again, this is trading straight off MT5, which means fees are not really here in play. However, if you go here to this section over here and you go to overview or market info, this is where you will, however, get charged, right? So if you are opening up longs, right, there is a certain fee that you could be paying, right? And specifically over holding it for a day, 2 days. And if you actually hold the opposite, which is a short, you actually get paid. So this is something to pay attention to when you're trading. Okay, is the amounts that you are getting possibly charged, or if you hold things overnight and things like that. Okay, but then it also gives you a basic breakdown, right, of firstly the hours that are available of trading, as well as all the different informations of position sizes, fee structures, or not fees, but it's basically the swap rates that you are getting charged for. Basically it means when there's one side that's kind of stronger than the other, you'll pay. And if you're in the other side, that's not as strong, so the shorting versus longing, right, you will get paid, right? But here we go. And then what you have is something over here, which is important, is a 50% liquidation, right? You can never get 100% liquidated. If you lose 50% of position, it liquidates you at 50%, right? So that's a cool mechanism. I don't know if you guys, but I've been liquidated for 100% before, and it sucks. So this is something that comes into play. But now, let's get back into the trading section over here. Okay, and just show you guys the basic structure. So this works a little bit different. Again, you have market limits to get in, market if I want to get in right now. Okay, again, with what's the downside of market? Because you buy multiple positions, so you could pay a little bit different in price, right? But when it comes to gold, you're looking at trillions and trillions of volume, right? So very likely whatever you buy now, you're going to buy in the same category of where price is. This is if you want to long. This is obviously where if you want to short. Limit orders is if I'm waiting for a price. So if gold's now at 4,012 and I want to wait for 3,800, I can put a limit order. Okay, as well as if I want to short higher up, I can put a limit order in play. Then it comes to this section over here, which is lots, right? So you got to get used to not using leverage. You just use lots over here. But I want to show you guys here. So one lot, right, is $1,000. And the value of that is $401,000 in position size, which means if I have $1,000 and I open up one lot, I open $401,000 in position size, right? If I have $100, right, I can trade 0.1 lot and have $40,000 over here, right? If I want to trade with $10, right, I can trade with $10 at 0.01, right, $10 on my cash, or $8 utilized, as you can see over here, okay, for $4,000 in position size, right? So this margin utilized is your amount of capital you're putting in, okay, and this is what your position size you'll be getting. So all you have to do is calculate for you that whatever cash flow you're playing with, right, you can look at the position size that you want, but then at the same time, you can obviously put in the different stop losses to see how much you're going to risk. So now let me take a position for you guys and show you this over here. So again, TA is important, right, to whatever you kind of want to trade. But let's say I want to take a short position now. So I zoom into the 1 minute. What's cool about this is you can trade 1 minute time frames, specifically with gold over here. And I put in this trend line here and I say, okay, cool. I want to short on this trend line break to the downside, right? If I want to do so, I then obviously look at a stop loss point. But now what I can do is I can click on the sell section. I can say, okay, I have $497 in this account over here. And let's say I want to short now and I want to put a stop loss at 4,019, right? 4,019. Okay, if I'm trading with $4,000, so 10 times more than what I got, I will pay $4.45 when it comes to my risk. If I want to trade with $40,000, I will risk $50, right? If I want to, let's say, do $20,000 position size, right, which is something like this over here, right, I will risk $18. Okay, I can nice sell, put in my short. Okay, let's refresh over here, show you guys my short process over here. Okay, cool. And as you could see, my realized pin, $3 to $5 over here. So what this basically means for me, guys, is when I'm trading the markets now, I can now trade with $40,000, $50,000, right? I can trade with $100, $200, right? I don't have the fees come into play, right? And I can trade the market for daily bread, right? With the $100, I can trade for $100 a day, right? With $500, I can trade for $500 a day. But the key thing is I don't have to risk as much when it comes to crypto, right? So again, I want to show you guys the power of being able to build massive size in the market, right? With not paying any fee structures and using a little bit of your capital. So again, to clarify over here, this is where all your information is at the bottom. When you open a position, you got your size, right? You got your unrealized pin, you got your entry price, your stop loss, right? And entry. When you're looking for entries, you're obviously looking for good risk to reward ratios. So again, yes, I'm risking, let's say, $30 or $20 in a position. But if I win, right, I'm looking to win $70 to $80. And the powerful thing is I'm actually going to get that because of fee structures, or not having the fee structures in play, right? You then have, this is your size. So it's crazy to think right now that I'm trading with, how much is in the actual position? I'm trading with $40, guys. I put $40 into the market, and I'm trading with $20,000 in position size. Guys, that's huge, right? So when it means to day trading strategies, you can work on your TA and look at your entries and things like that. The key is always risk to rewards. But the powerful thing is losing little bits, losing little bits, losing little bits, winning one trade and making a massive amount, right? This is not possible when it comes to trading crypto. Okay, so again, when crypto is trending, gives me an opportunity to use crypto. When it comes to something like this now, like here we go. Guys, did it not say I was going to lose $20 or 20 something dollars? I got stopped out. I lost $22. Guys, if that happened in crypto, I would have lost $50 to $100 with that position size that I traded. If I traded $40 at $20,000 position size, right, which means I have to 200, 300x, I would have paid nearly more than the entire position or the capital that I put in fees. I got stopped out and I lost $22. Right, that is the power of trading when it comes to non-fee structures. So guys, if you don't have a Bitget account, there's a link below in the description. Sign up over there for an account. But this is truly another massive tool that you can add to your toolbox when it comes to trading in the market and being able to trade with massive size, not being destroyed by fees, and actually have a place that you can trade a day trading strategy. Thank you guys for watching. Lots of love. Bye-bye.